Hey guys, Matt Holm here with Compass. Just wanted to go over a couple things. Really interesting program I'm doing. We're entering the selling season right now. It's kicking off actually a little early. January, we're seeing a little bit of a pop in open houses. Not a ton of contracts right now. Typically, we start seeing a lot of buyer interest in February, March. The challenge we're having right now, a couple hurdles we had to get over to get buyer interest. We had to get through the election. No matter which side won, we had to get through the election. A lot of people were waiting to see what happened. Had to get through the holidays. A lot of people don't know this, but there's a seasonality. And so we're getting through the holidays. We're coming through people paying off their credit cards. They're getting back into shopping mode. The weather is going to warm up, and typically February, March is when it kind of pops. We're seeing an earlier pop right now. The last objection, and this is the biggest one that's been battling against real estate the last 3 years, and sellers being able to sell their homes and buyers having interest, is interest rates. Now, we don't know that interest rates are going to come down this year. We do have a very like his policies or not, we do have a very pro real estate president coming in. People are optimistic, but the Fed is going to try to control interest rates. What that means is they may not lower anytime soon. And so I've got about $25 million in listings coming up sometime between maybe as early as January, definitely coming on by March. And I'm going to be using a program that actually a friend of mine brought to me, Ryan Leahy, essentially taking advantage of your current house. If you're a seller, this is directed to you. I want you to listen very carefully to this, because your buyer is not buying your house because they're waiting for rates to go down. What if they could get the rate that they're waiting for at 5%, let's say, or 5.5% right now, and not wait for them to come down from 7 or 6.5 where they are right now? Because all the buyers are sitting, they're waiting, and they're waiting on this magic rate. Well, this is how you do it. It's called the More Program bridge loan. And so basically the seller is offering, let's say you have a 2.5 to 4.5% interest rate. You're like, well, I've got that under there. It's not helping me though. It actually is, right? Buyers are sitting at 6.5% plus a bunch of fees, 3% in fees that they've got to put together with the loan. So not only is it costing them more, there's more cost actually with a traditional loan than there is with the More program. And what you can do with this one is you can offer a rate. Let's say, I'll use an example. And by the way, I'll stop right now. I'm a realtor. Talk to Ryan. He's the one you want to speak to on this, because I can't give financial advice. I'm going to give you real world examples with a client of mine. They were sitting on a 3.25% interest rate. They were offering 5.5% to an incoming buyer that was getting a rate closer to 7%. They were able to meet in the middle. And so that buyer was able to purchase something at a lower effective rate, at lower overall costs. And the seller was able to garner interest because they were able to offer lower than par rate. And they still made the spread between the 3.5% and 5.5% interest rate. Listen to me carefully on this. This is huge. This is actually dollars in your pocket. So let's say you're happy-ish with the price, but you need to get it sold, right? This makes you happier, because let's say you hold that note for 1 to 3 years. You decide, you can set the terms. You're essentially a middle bank in this with the bridge loan program. And so you can make as much or as little profit depending on how attractive you want to be to buyers. And effectively, they get a better interest rate. You become like Chase and Wells Fargo and Bank of America in the middle of this, right? They make all their money on the way they amortize mortgages. They get their interest up front and their principal at the back. And so you're going to be getting on that spread a really robust piece of interest. So it nets you more money than a traditional sale. You become a partial bank in the process, and they have created a program that makes this streamlined, easy, cost-effective. I want to put this stuff on every single one of my listings, because we need a differentiating factor. When you're coming on the market at a busy time and it's going to ramp up, keep in mind, you're also in competition with everybody else that sees the seasonality. This is the differentiating factor that sets you apart from every other seller that's coming on the market right now that wants to be competitive. You can be the same price, but you're netting money. The buyer's saving money. It's a win-win, and it helps me market your property. So I'm excited to be able to offer this program. You should definitely check in and get more details, because this thing's effective. Call me if you have any questions. I can connect you with Ryan.